Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Tuesday, September 15, 2009. The pound-dollar pair fell steeply in today's trading after Bank of England Governor Mervyn King said officials are considering lowering the rate paid to hold reserves at the central bank. Following a test of 1.6660 in the wake of a stronger than expected inflation report from the UK, the pair plunged as much as 250 pips. That brought the pair to the 1.64 level, which tested a level of resistance that had been broken last week. The euro-pound rose to its highest level since May, breaching the 0.8825 level that we took a look at yesterday. From its intraday low, the pair rose 120 pips before stalling near 0.8890. That breaks the pair out of a period of sideways action following a rally from the middle of August to late August. In fundamental news from the UK, the consumer inflation rate fell less than expected in August as higher oil prices offset the effects of the recession. Consumer prices were up 1.6% on the year, following a 1.8% annual rise in July. That reading is the weakest inflation has been since January 2005, but expectations had been for an even smaller figure. On the housing front, the RICS house price balance turned positive for the first time in 2 years, with a net 10.7% of surveyors saying they saw higher housing prices. The DCLG House Price Index, meanwhile, showed prices were down 0.3% on the year in July, a better than expected reading following June's 10.7% annual decline. In the Eurozone, the German ZEW economic sentiment rose 1.6 points to 57.7 for the September period. That is the highest the index has been in 3 years. Improving factory orders, exports, and business confidence suggest growth in the economy is accelerating after Germany exited its recession in the second quarter. The index is closely watched as it is a survey of investment professionals and can give good insights into analysts' expectations. Still, the rise in the index was smaller than expected, which weakened European stocks and pressured the euro slightly in overnight trading. The euro-dollar pair traded within a narrow 60 pip range overnight, lacking any excitement. The pair fell to test the 1.4560 level before rebounding in New York trading as the U.S. posted a better than expected retail sales figure. Also, Fed Chairman Bernanke said that from a technical perspective, the recession in the U.S. is over, though it's still going to feel like a very weak economy for some time. Still, there was a sense of risk appetite in New York trading as U.S. stocks rallied late, which helped the pair rise above yesterday's high in a 100 pip move from low to high. U.S. retail sales surged in August by 2.7%, the biggest rise in 3 years, as consumers took advantage of the government's Cash for Clunkers program, though a 1.1% increase in the core retail sales rate shows that consumers were spending on more than just autos. U.S. producer prices rose 1.7 on the month in August, a figure that was twice what was expected by economists. The increase was primarily led by higher gasoline costs, as the core monthly rate was up only 0.2%. Energy costs rose 8% on the month, led by a 23% gain in gasoline. Thirdly, the Empire Manufacturing Index rose to 18.9 for the September period, the highest level for the index since late 2007. New orders were positive and higher than last month, while future indexes remain relatively high and close to their August levels, suggesting that conditions are expected to improve further in the months ahead. The dollar-yen pair extended part of its rally from yesterday in overnight trading, reaching the 61.65 area. But that ran up against a level of old support, now turned resistance, and the yen managed to trim its losses and bring the pair back down to the 91 level. U.S. stocks seesawed following the U.S. data, but were generally higher in later New York trading, which stalled the pair's decline. Oil prices rallied today, which helped the Canadian dollar. The U.S. dollar-Canadian dollar pair fell from its intraday high near 1.0870 to a low of 1.0750, which ran up against an upward sloping line of support. The pair then stalled around its low from Friday's trading. In a look at another commodity currency, the Australian dollar remained mired in sideways action, the sixth session that the Aussie-US dollar pair has been in consolidation following the break of the 0.8470 level. That rally put the Aussie at its high for the year, and traders may now be looking for further direction in which to take the pair. Overnight, look for UK employment data, the claimant count, and also Swiss retail sales and the Swiss ZEW expectations index, along with the final version of August's Eurozone consumer inflation. Tomorrow, the U.S. releases its consumer price data, along with reports on industrial production, the housing market, and the U.S. current account. Canada, meanwhile, unveils its manufacturing shipments. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.